Hi, welcome everyone to the first trade breakdown of CPI of week 1. Now, my objective and my goal with this trade breakdown is to make sure that I explain my thought process behind taking these trades and what actually went behind generating this idea on the higher time frame, and how I actually executed the trade and how did I actually manage it, right? Now, you may have watched tens of courses online, but those courses didn't help you and didn't made you reach profitability, because in those mentorships and those courses, what those guys do is they just teach you about theory and teach you technical knowledge without showing you how you can apply that knowledge and that theory in live markets, and how you can generate trade ideas through that knowledge. Right now, you're going is going to be completely different right here in CPI, and I'm going to make sure that I give you enough and adequate amount of trade breakdowns and trade recaps and trade signals even, so that you could actually see how am I using this CRT knowledge and this turtle soup and time and price knowledge to farm trade ideas on my own. And then you can compare it with your trade ideas and then see whether you are improving or not, and you can reverse engineer it on and back test it yourself, and then you're going to reach a certain point where you're going to be able to replicate this knowledge on your own, and you're going to reach a point of optimal performance where you're going to be able to form trade ideas on your own, and you're going to be able to execute them, which is obviously going to lead you to profitability and success. Right now, today is Tuesday, right? And so first of all, we are intraday traders, right? Most of us, if not all, are intraday traders, and our job as intraday trader is to exploit the daily range, right? To exploit the daily range and exploit a 4-hour CRT. So our job is intraday traders is to exploit the daily range, not the weekly range, not the monthly range, but just the daily range and a 4-hour CRT, which we are going to use to farm and frame our trade idea and trade setup, and that is going to give us our stop loss, our entries, and our targets. Right now, I'm going to teach you all of them in CPI, but this is basically just an introduction to it and an overview to it of how and of what you can expect from CPI. Right now, first of all, we're going to start off with the weekly time frame. Now, the most important time frame for us intraday traders are the daily, the 4-hour, and the 15-minute time frame, right? And this is being found through time frame alignment, right? It's time frame alignments which tells us what are the optimal time frames for intraday traders. And for us, it's the daily, the 4-hour, and the 15-minute. The daily is going to be used to find drawn liquidity and a certain buys, and the 4-hour is going to be used to find a CRT, right, during the day, which we can use to frame our trade setup on the 15-minute, which is going to be our entry time frame, and then we're going to execute that setup on the 15-minute, and that is going to give us our stop loss, entries, and targets. Right now, on the weekly, right here you can see that we had this CRT right here. Now on Twitter, I had given this trade signal in live call right here, and as soon as price took out this CRT low right here, and then it closed above, starting from this week, I was expecting price to take out this range high right here, and then price took out this range high, and it formed another CRT, and price took the CRT high, and then it expanded lower. Right now, we are currently right here, and right here you can see that we have this big bulky candle right here, and we can actually treat this as a CRT, but we're not going to anticipate or expect it to be a CRT right away. We're going to need a certain context and narrative before we confirm this as our CRT, and I'm going to show you how you're going to do it. If we go to the monthly time frame, then you can see that we have this discount rejection block right here, and on the weekly you can see that this big bulky candle right? And this CRT, this potential CRT, right, uh, close just above this rejection block. Now the way how we're going to expect this CRT to be an actual CRT is if we expect price to come down lower, test this monthly higher time frame rejection block, a discount rejection block here, right, and price to take out this CRT low, and then we can have a reaction from here, and then this reaction can either be till this 50% of the CRT, and then the uh, opposing end of the CRT. Now we're not going to expect it right away, but instead we're going to just expect either a retracement profile or reversal profile. Now market profiles are really important if you want to learn CRT and turtle soup to its max, right? And in this weekend chapter I'm going to explain market profiles to you in the most refined, accurate and precise way possible, and after watching that video with multiple examples, you'll never need anything to understand market profiles. You will completely get the idea of how market profiles work and how you can actually combine it with other concepts and other key levels and other PDAs, etc., to form and generate trade ideas, and how you can use market profiles as filters to avoid bad market conditions, right? Now as I said, we're going to first of all expect this CRT low to be taken, and then we're going down to the lower time frame, and then based off of the price action on the lower time frame, we are going to decide either we want to treat this candle as a CRT or not. Right now we actually haven't done it yet, so we are going to go down to the daily time frame and see how price action is forming there. Right now I'm going to do this right here, so you can see the 50% of this range right here, and on the lower time frames. Right now on the lower time frame, this is that big bulky candle which can be potentially treated as a weekly CRT. Now this is the 50% of that range. Now obviously first of all I'm expecting this low to be taken and price to react off of this rejection block and test this rejection block, and then we can expect a reaction from here towards this 50% of the range or the 25% of the range, or maybe potentially towards this opposing end of the range, right? But it's all going to be done through confirmation on the lower time frame, right? Even if we take out this low and we have a reaction even till the 25% of the range, it's more than enough range, right? If I measure this range right here, you can see that it's almost 60 pips, so you can see that it's more than enough amount of pips or adequate amount of pips to offer you a trade idea or a potential trade idea on the lower time frame, and you can actually be profitable from that reaction and you would have made money. Right now our job as a trader is to accept losses and accept the fact that losses are inevitable. So when you are trading turtle soup and CRT, you should accept this fact, you should accept this harsh and bitter truth that you're gonna have your losses. You're gonna have times where a CRT won't work and you're gonna have losses, right? And there's going to be times where you're going to earn a lot of money, and then there's going to be a balance of both. There's going to be a balance of wins and losses, and you would want to have a higher risk to reward ratio. That way at the end of each month you would make sure that you always end the month in green and be profitable and earn money, right? Now so here now I've already explained what happened on the weekly. Now we're going to refine that on the daily time frame, right? I'm going to okay, it can stay. Now you can see right here that we have this candle right here as well on the daily time frame, right? Right, and we have also this order block. Now is I'm expecting price to first of all take this low right here, this weekly low right here. So to frame that on the daily time frame, I was expecting this daily high to be taken, right? This Friday's daily high to be taken, and then price to react from here and then potentially come down lower, or either to test this rejection block and then potentially expands either from here or from here, right? That was my buys. So when candle opened right here, my buys for the day, for the session, was first of all price to take out this high, right? Now if we go down to the 4 hour time frame, on the 4 hour time frame we're going to see that it was also in the form of this range high right here, right? Right, it was in the form of this range high right here, and you can see this is the 50% of that weekly candle with that weekly potential CRT, right? Now we all know that there are 6 4 hour candles in a daily candle, right? And our job as a trader is to select and find a CRT on the 4 hour, and then frame a trade idea off of that CRT on the 15 minute, right? Now if you know about TSQ or the sequence, then you would know that when we have a certain range such as right here, right, let's say we have this range right here, and then we reverse from here, and this is, let's just say, our drawn liquidity. Then first of all we have model 1 entry, right? Then price reacts from here, and then it has a turtle soup here, and then before it takes out this high, what happens is this is that price stops right here, and then retrace it, and then has another turtle soup before taking out this high. This is what we call a KOD. Now right here you can see that before we took out this daily candles high right here and this range high on the 4 hour, we stopped and came down lower before we actually took out this high, right? So when on Tuesday I was expecting this high to be taken, right? And I only take trades during a certain time of the day, and that time is during the London open kill zone and the New York open kill zone and the London lunch or and the London close kill zone. I avoid taking entries during the Asian range and the CBDR, the central bank's dealers range. I avoid trading during those times, so I only take trades at certain times of the day, and then I even refine those times to such as the 3 a.m. time and the 9 a.m. macro, the 5 a.m. macro, right? I'm going to teach all of them to you throughout these months, but let me explain my thought process to you. Now for some of you it might sound a bit too overwhelming, right? It might sound a lot, but that's exactly my point with these trade breakdowns. Now for some of you, you're going to find this overwhelming, but as you go through these trade breakdowns and you go through CPI and watch all of these chapters about market profile, CRT, turtle soup, Peter raise, and all of these other concepts and profiles, you're going to find out that you are now understanding these trade breakdowns, and you're getting familiar with them, and you are even finding trade ideas on your own in the live markets, right? So it's going to be a long, lengthy, boring process of you studying these breakdowns, studying these outlooks, and studying these weekly chapters, and that's going to develop you as a trader, right? It's going to be boring, and that's how exactly it's meant to be. Now I'm going to remove this right here, and then we're going to deal with the price section right here, right? Now you may know about the 9 p.m and the 5 p.m CRT. So this is the 9 p.m CRT, right? This is basically the Asian range, and this together forms the flout, which is the combination of CBDR and the Asian range, right? Now first of all, I selected this this CRT right here, and I wanted to price to take out this CRT's low, and then find an entry from here towards this drawn liquidity here. So our buys was first of all bullish. Now our buys was bullish, and the reason for that was that we were in the QD stage and the kiss of death stage of this whole sequence, right? And our drawn liquidity was also higher, which was this range high and this daily CRT high right here, right? Now obviously I'm expecting this range high to be taken right here. It can potentially act as our drawn liquidity for our as a target, but my job as an intraday trader, using CRT and turtle soup concept is to frame a trade idea within this CRT right here. Now we're going to go down to the 15-minute time frame and then see what happened here. Now you can see right here that this is that CRT 9 p.m. CRT high right here, and this is the 9 p.m. CRT low. And what happened is that price purged this CRT low on the 1:30 a.m. macro, which is basically a huge macro and a really important time for CRT purges, and we purged that, and then we closed above and we had a CSD which confirmed our buys and confirmed our drawn liquidity. Now what I did is took a model 1 entry. Now for those of you that know model 1 entry, you're going to see that basically we're going to take an entry at the open of this order block, right? At the high of this order block, right? And then we're going to put our stop loss right below this swing low, and we're going to first of all target the 50% of this range, right? Our first target is going to be the 50% of this range, which is right here, and our second target is going to be the CRT high right here, right? Now so what happened right here is that I took some partials here at this 50% of the range, and then what I did is that put my stop loss at break even, and then I let my trade play out. Price was just about to take this high before it actually reversed from here and got me out of the breakdown. So even though my buys somehow or in some way was wrong, I still made profits, and the way how I actually made it is by taking my entries here and then taking some partials out right here, right? So with CRT, what happened that even though my buys was kind of wrong, it was right but it was kind of wrong based on the timing of it, but I still made profit and avoided loss, right? Now then what happened is that price reversed below again, and then we formed this 1 a.m. CRT. Now this was a perfect time for me to take another entry towards that drawn liquidity on the 15 minutes. So I was looking for price to purge this CRT low at the right time, which happened during the 7:30 a.m., which is a good macro for price to purge a CRT low, and it was also the start of the New York Open, right? So we purged the CRT low right here during the New York Open, and then what I was waiting for price to close above the candle that dug below the low. So this was the candle that dug below the low, and then what happened is price closed above this candle's high, and then we could have taken our model entry right here at the high of this order block, and our stop loss could have been right here below this low, and we would target first of all the 50% of range, which is somewhere right here, and then the opposing end of the range, right? So these were the two entries that I had taken on Tuesday. So first of all, my expectation was for price to take out this CRT low and then target this one. This trade did not fail. The drawn liquidity and the timing of it itself failed, but I still made profits here. And then I waited for another opportunity, right? Some people would be taking trades right here, and they would have ended up in loss, but what I waited for is for price to form another CRT, which was this CRT. So I did not take an entry right away, but instead what I did is waited for price to purge this CRT low at the right time, which was the 7:30 a.m., right? And then I waited for a confirmation before I could actually take an entry, which was in the form of model 1 entry right here, and I waited for a CSD to happen, which occurred, and then I took my entry right here at the open of this order blocks high. My stop loss was right below this low, and my target was first of all the 50% of the CRT range, and then the opposing end of the range. This is what we call model 1, right? So this was my trade breakdowns for Tuesday, right? I hope you've learned from it. Now for some of you it might sound too overwhelming, but don't worry. Throughout these months I'm going to explain every concept that I'm using in these trade breakdowns, and then throughout time you're gonna find yourself uh, capable enough to understand these trade breakdowns, and you're going to find yourself finding trade ideas on your own, right? Okay, so this is my execution right here. So you can see, first of all, I took my entry right here at this order block right here, which was a marketable entry, and I took some partial sale right here at the 50% of the range, and then I got out of the rest of the trade right here at break even, and then I waited for another opportunity and took my entry right here at this order block, and then rode it till this CRT high right here. And this is how, even though I was wrong here, somehow wrong here with the timing, I still ended the trade with profits, and then took another trade right here, and these were two of my winning trades for the day, and ended the day in profits. It was around 4 or now. With this, even if I lose the next 3 trades, I'm still going to be in profits, right? So that's the magic of win rate and risk to reward ratio, and you should keep a balance of both.